Hello everyone, George DeSantis here with the look at the market for the week ending Friday, November 27th, 2020, um, day after Thanksgiving. Friday, it was a shortened day, terminated at 1 o'clock. And I thought I'd do this tonight instead of waiting until tomorrow. So let's see what we have. Market's been doing pretty well, very well, in fact. Before we begin to look at the charts, etc., we usually bring up this disclaimer, and I want to do that now, and simply invite you to take a look at it and be sure that you understand I'm not a licensed professional investment advisor, and therefore I'm not attempting to give anyone professional advice here concerning stocks, etc. It's for my own purposes, and I post it as a YouTube video, so anyone might want to take a look at it. That's fine, but it's for my own edification. So let's begin then by taking a look at some charts. So we're going to start as usual with a weekly chart of the S&P 500. And let's bear in mind, first of all, that we're in that sweet spot, as we call it, as I call it, where the market tends to rally from about the middle of October. It could be later. Larry Williams and Jake Bernstein, their seasonals show from November 20th until the end of the year or early next year. So we're in that sweet spot, and let's take a look and see what the charts are showing us. First of all, on this weekly chart, you can see that the moving averages are above each other, the ones we use, the 4 EMA, the 9 EMA, the 30 weighted moving average, and the 50 period moving average. And insofar as moving averages go, we still have a nice uptrend. We now have what looks like to me as uh, quite a bullish candle, and it's also a bullish engulfing candle because this body of this candle pretty much engulfs the body of this candle. Now it's hitting two standard deviation here, the Bollinger Band of two standard deviation. So anytime we get to that level, we could see a little bit of a consolidation of that gain, meaning a little bit of a pullback, but not necessarily so. We could ride this two standard deviation line much higher. So that's what we're seeing here. Now, parabolic is now below the parabolic, this white dot here, parabolic stop and reverse indicator, tends to it tends to follow the trend, or at least indicate what the trend is, whether it's up or down. When the parabolic dots are below the most recent bars, especially the most recent bar, we have an uptrend. And if we look at MACD here, we see that we got a buy signal on the 1226.9 MACD that gives us buy signals, and since then the histogram has been trending up, and we didn't get any sell signals here at all on the one we use for sell signals. I'm going to keep the charts lighter than we usually have them with a lot of other indicators so we could see more clearly. Now we turn to a daily chart of the S&P 500. And you can see here that the moving averages are likewise just as they were in the weekly chart. They're above each other here, like the 4 above the 9, 9 above 30, etc. So insofar as the moving averages go, daily chart is also bullish. I'm going through this pretty rapidly because I think you get the idea by now. You can look at the charts. Those of you who've been seeing this for some time, you can see the parabolic is below the most recent bars, the last three bars, and especially this current bar, this last bar on Friday. And so we have, according to parabolic, we have an uptrend. Trend switch from down to up here. Okay. Um, what else? There are a few other indications here, like this box. I'll explain what that is later. MACD histogram, the one we use for buy signals, since it offered this buy signal here back on November 5th, it's remained on a buy signal. There are no sell signals here. So we're in this nice bullish market, as I mentioned earlier, in the seasonal trade. I thought we would take a quick look at the weekly chart that Jake Bernstein uses. One of his charts called the moving average channel, and I've been sending you a couple of those charts that he sends me every day. And what he plots here is a 10-day moving average, simple moving average of the highs, an 8-day simple moving, well, in this case, 8-week, or it's an 8-period simple moving average of the lows. So you have an average of the highs, an average of the lows, and you have this so-called moving average channel. And the way I understand that he uses it is that you get a buy signal when you get two complete bars or candlesticks in this case above the moving average of the highs, and you also get the Larry Williams accumulation distribution line above its moving average, its 57 period moving average. So in this case, it is a weekly chart, and I'm going to show you how he uses it. He says, you know, you make most of your money, which is true if you're an investor, as long as you could live through these drawdowns here. You make more of your money buying and trading off the weekly chart. Let's face it. So when would you buy and when would you sell? Well, you would buy as soon as you got two complete bars, which is the setup, and Williams accumulation distribution line is above the moving average, this blue line. So you'll be buying either here or a more conservative buy point would be when price moves into the channel, and especially closer to the bottom of the channel as it did here and here. So those are the ways you'll buy. When do you sell? Well, he has targets. He sets targets, and I won't have the time to go through all that now. But basically, the chart is showing you that we're in a very bullish period here right now, because the accumulation distribution line is bullish, is above the moving average, and the momentum line that he uses as well sometimes on some other charts, momentum at 28, is trending up now. So I just want to show you that. It's also very bullish. And if we switch to his daily chart, you can see there's more volatility, of course, and you can see there's more volatility, but it's used in very much the same way. It's the same. You have to have the setup, in this case, 5 bars, which is very bullish, and the accumulation distribution line above the moving average as it was here. So in this case, you would have a setup of 5 bars, these 5 bars, and you'd have a trigger when this accumulation distribution line crosses above the moving average. So buying after you get this this setup here of the 5 bars and the trigger would be buying on this bar here, okay? But if you didn't get the more aggressive buy signal here and you didn't execute that order, then the more conservative buy signal is when it touches this 8-day moving average of the lows. This is where your most conservative buy signal is, and of course now you have a gain. So we'll leave these charts now, and we'll go to some stockcharts.com charts as we usually do. So here's stockcharts.com chart of Apple, and I usually like to take a look at Apple because the way I put it is this, you know, as Apple goes, so goes the rest of the market. Well, not ideally, not exactly. Right now, if you look at Apple, we have a triangle. We could draw a line here, a neat triangle. So we are likely to break out of this triangle here, you know, somewhere above like 120 or so in the near future. But let's take a look at something else. Now the new high, new low index is still showing very bullish trend here. So, and that's a leading indicator according to our friend Alex. And then we have the impulse, excuse me, impulse indicator. Bars painted 3 different colors, red, green, and blue. When we're on blue, we are not allowed to go. Well, when we're on blue, we could go short or long. It doesn't matter, short or long. But I wouldn't short the market here based on what we've already seen. And here's McClellan oscillator, and you could see it's in bullish territory, so no need to be concerned about this one. And here's the the chart of the percentage of stocks above the 200-day average of the S&P 100. And you can see that since we had the spikes down here, we're in bullish territory. This thing, we have a lot more stocks making being above their 200-day average, and that's pretty bullish. And before we go on to shaking and look at some individual stocks, I thought I'd show you that seasonal trade. Now, I lengthened the period to 56 days to give us at least 56 days, and you can see that the trade begins October 25th and ends December 23rd. So from the middle of October or so to the end of the year, we typically get that consistent trade. 14 out of 16 years, 87% of the time, and profit of 3.3%. All right. So let's turn to some individual stocks and ETFs on Shaken Analytics. This is a list of stocks that I screened for. I took them out of many of these lists here, and I selected the ones that were oversold or interesting from some other angle. Okay, perhaps it wasn't oversold, but it looks good otherwise. So let's take a look at some of them. ADS, I own this one. You can see it's almost oversold. It became almost oversold and then started ticking up, and Mark Shaken himself says this is one of the 5 stocks that he likes until the end of the year. You could see that Google, which is another one he likes, is now oversold, right? And ticking up. Let's put the checklist on. It's optimal buy, right? I'm just going to go through as many as I can. We have another couple of minutes left. The Dillard's is pretty much oversold, and it's coming off the 21-day average. You could actually take your camera and take a picture of this list and refer to it later on. Okay, so I'll give you the whole list. I'll page down in a little while. Here's JD, which is JD.com, the Chinese stock, almost oversold and ticking up now from the 21-day average. NIO, I have been trading NIO. I've been buying and selling it and, grabbing a few $1,000s here and a few $1,000s there. I would buy it off. I do some day trading once in a while using the stochastic, the 1233. Yeah, I trade it. So that's been pretty good. I don't own this one. This is a biotech. It's oversold. I don't know anything about it. This is Taiwan Semiconductor, and you can see it's almost oversold. This one, United Therapeutics, another biotech, is oversold. That's very oversold, but it's below the 200-day average, so I'm not so keen on that. Let's page down a bit and go see some other ones. Here is Lowe's. Lowe's must be just oversold and ticking up again, but it's below that 200-day average, so I don't know, I'm not too keen on it. Microsoft, below the 200-day average, but starting to look better again, Optimal buy. It was oversold and ticking up. So Microsoft, if you like Microsoft, probably a good time to start buying some. Here's Thermo Fisher, and that's oversold. Adobe is oversold and ticking up. See it oversold here and ticking up. Align, used to own this year, a year ago. It's oversold and ticking up. $450 stock. APPS, I don't own it right now, but I have owned it. It's almost oversold. So here's a list that you could refer to. CDNS, I own this one for a while. I might look at it again. It is oversold and ticking up. Optimal buy, right? Home Depot, likewise, is oversold. You just go through these here. NVIDIA is oversold. So many of the familiar names, Etsy,